This is part 7 of our video on the Nigerian tax and dissecting it for clearer understanding. So in the last video, we've been able to, dissect all the, exemptions, that company have under personal capital gain tax for companies and for individuals, and some other information that you need both personally and as corporate organization. So make sure you go through all these parts that we have put on our YouTube channel for you to have clear understanding of the Nigerian Tax Act in readiness for next year. So in this part 7 of this Nigerian Tax Act 2025, dissecting it for clear understanding, we'll be moving ahead with the value added tax. Value added tax. Value added tax, that's VAT. So the value added tax rate remains unchanged at 7.5%. So which is in section 148 of Nigerian Tax Act. So the value added tax is still the same 7.5 that we have in this current tax act, which we still have in the Nigerian Tax Act. The VAT vertical distribution formula has been revised as follows. So this is how the VAT will be shared among the 3 tiers of government. So for federal government, it has reduced from 15 to 10%. State government has increased from 50 to 55%, while local government remains at 35%. The VAT horizontal sharing formula is introduced as follows. For equity, we have 50%, for consumption 30%, for population 20%. So this is contained in section 81 of Nigerian Tax Administrative Act. Then for local government distribution, it is equity at 70%. Equity at 70%, population as 30%, making a total of 100%. Expanded list of exempted items. The Act provides a proposed list of goods and services exempt from VAT. The proposed exemption list comprises the new introductions in addition to items that were previously zero rated. One of such are goods or services supplied to a diplomatic mission, a diplomat or a person recognized under the diplomatic immunities and privileges. Privileges at whose activity is in public interest and not for profit. The Act also provides a proposed list of goods and services that are VAT zero rated. The new zero rated list comprises items that were previously exempted and a new introduction. So the difference between zero rated and exempted is that for zero rated, you can claim VAT inputs, but for zero rated, there's no claiming of VAT inputs. So that's the difference. So the items and goods and services include electricity generated by generation companies, that's GENCOs, and supplied to National Grid or Nigeria Bulk Electricity Trading Company, that's NBET. Electricity transmission by Transmission Company of Nigeria, TCN, to Electricity Distribution Company, that's DISCOs, and exported in corporal property, among others. The VAT Act has a list of other exempted items. Participants are expected to visit the Act and copy the list. So we've actually brought you a video on this value added tax, the list of exempted items for goods and services, those that are zero rated, those that are exempted totally. So we brought you a video on it. Do well to watch it on our YouTube channel, like and subscribe, and refer us to businesses. So the input VAT claim. So the input VAT is actually claimed by manufacturer, those that are into production. The scope of recoverable input VAT has been broadened to include VAT incurred on services and fixed assets, provided that such supplies are consumed or utilized or supplied while making taxable supplies. So these are the conditions. So it has been increased to services and fixed assets. And the condition is that it must be consumed, utilized, or supplied while making taxable supplies. So that is when you can claim the input VAT. VAT at zero rates on essential goods and services. The NTA expands the list of zero-rated items to include essential goods and services such as basic food items, medical and pharmaceutical products, educational books and materials, electricity generation and transmission services, medical equipment and services, tuition fees, exports, excluding oil and gas exports, and among others. The impact of this is that businesses selling these goods and services can recover their VAT costs. That is it, despite the zero rate, which was previously not passed by law. So in this current tax act, you don't have something like this, but in the NTA, it has been introduced, which is a plus for manufacturer and those that are into production businesses. Section 187 of NTA included the following under the zero-rated VAT. 1. The basic food items, all medical and pharmaceutical products, including medicinal herbal products, educational books and materials, fertilizers, locally produced agricultural chemicals, locally produced veterinary medicine, locally produced animal feeds, live cattle, goats, sheep, and poultry, agricultural seeds and seedlings, electricity generated by generation companies, that's Genco, and supplied to National Grid or Nigerian Bulk Electric Trading Company, that's NIMBET. Electricity transmitted by Transmission Company of Nigeria, that's TCN, so Electricity Distribution Company, that's DISCOS. The medical services, taxable supplies charged at 0%. That's it. Because this is contained in 13th schedule of the Act. Then we have fiscalization of supplies for VAT. Section 157 of the NTA mandates taxable persons to implement the physical tools that may be deployed by the tax authority, which may include electronic devices, software solutions for electronic invoicing and data transfer. So these have been introduced by the Federal Revenue Service, which will be called Nigerian Revenue Service from next year. Section 23 of the Nigerian Tax Administrative Act mandates any person making taxable supplies to adopt any electronic physical system, that's EFS, for recording and reporting transactions. When the Nigerian Revenue Service implements such a system, a notable example of the EFS that has been introduced by the Nigerian Revenue Service is the value-added tax automation and e-invoicing. So this value-added tax automation, you know what it is. So the tax forms can file and all of that. The e-invoicing have been, ongoing. Is ongoing. So the last taxpayer from 5 billion above have been implementing it. I think they concluded it on 1st of November 2025, and the medium and small taxpayer now their own will be implemented. So it's good to have this implementation done in your organization for seamless invoice tracking and claiming all your VAT allowances, reliefs, and exemptions. So elimination of self-charge VAT. So they are eliminating self-charge VAT in this new tax act. So FIRs can make regulations to ensure that VAT is collected on vatable transactions. That's why they are introducing the e-invoicing. So the FIR will be able to see it, and then all tax will be collected appropriately. Currently, their self-charge VAT as stipulated in section 14 subsection 4 of VATA, that's Value Added Tax Act. Self-charge VAT promotes double taxation. So that's the reason for the elimination of self-charge VAT. And this value added tax, of course, have been repealed and amended in this Nigerian Tax Act. So expenses on which VAT is due but not charged will not qualify as an allowable deduction. Let me say that again. Expenses on which VAT is due but not charged will not qualify as an allowable deduction. So if you are meant to pay tax on an expenses and you don't pay, you will not get allowable deduction on the expenses to reduce your tax liability, meaning that you must pay VAT, every necessary VAT on every expenses, every asset, and every transactions that will make you to enjoy allowable deduction to reduce your tax liability. Section 21 of the NTA lists items that do not qualify as allowable deductions. Section 21B includes expenses on which VAT has not been charged. This means that such expenses will not be considered allowable tax deductions, even when those expenses have been validly incurred for business purposes. You can see what we are saying. This implies that a company could be held accountable for any inaction or non-performance by its suppliers or service providers, while the defaulting service providers may eventually be required to pay the VAT during an audit or investigation. The company will have already been denied the ability to claim or deduct or to claim a deduction for the related expenses. That's what we are saying. Do the right thing. Comply to all the necessary compliances that you need to do so that you can enjoy your allowable tax deduction on your expenses, business expenses. So we move quickly to stamp duties. Stamp duties. Charge of duties and applicable rates. So stamp duties are the duties that is being paid on official document, business document that is under the Stamp Duty Act, under this NTA. In a structured and simplified manner, Section 124 of the Act, subject to the exemptions outlined in Part 3 of Chapter 8 of the Act and consistent with the rates specified in the 9th Schedule to the Act, categorizes the instrument liable to stamp duties as follows. A, we have instrument which, not having been previously executed by any person or executed in Nigeria, is liable to stamp duties. Then B, instruments executed outside Nigeria that relates to property situated or to any matter or thing done or to be done in Nigeria, enhancing the rates stipulated in the schedule to the Stamp Duty Act, that's SDA, and reinforcing the powers conferred by Section 4 of the Stamp Duty Act as amended by Finance Act 2019 on the Federal Inland Revenue Service, that's FIR, to impose chargeable and assess stamp duties on relevant instruments. The 9th Schedule to the Act provides a more comprehensible and self-explanatory outline of the applicable rates for various instruments. So that is what it is, the instruments that are liable to stamp duties and the conditions for it. Liability for stamp duty. One of the most notable or noteworthy reforms in the Act is the clarification provided in Section 125, subsection 25, and the 9th Schedule regarding the party liable to stamp duty. For instance, loans, the lenders is liable. For lessees, the lessee is liable. So those that are liable for each of those stamp duties. For transfers of property, the transferee is liable to the stamp duty to be paid. For guarantees, the guarantor is liable. So these are the schedule, rates of duty, dutiable instruments. So you can see it from here. Agreement or contract accompanied with a deposit like mortgage, see it. The new rate, this is the new rate. Person liable to pay, mortgagee. Exemption relates to property less than 10 million. So you can see from 1, 2, 3, 4 to 9 years. So you can see what it is. You can see what it is. You can see what it is clearly here. You can see what it is. You can see what it is here. Stamp duty and the rates. You can see what it is. That you know the rate that will be paid if you are the one liable to pay. You can see the rates. This 21, 22 to 20 to 31 year. You can see it. Document and the instruments that stamp duty will be paid on and the applicable rates. So you can see it. You can see what we have. There are many of them here. Bill of lading, guarantee, letter of credit, policy of marine. You can see it. You can see the rates and who is liable to pay up to 48. Electronic receipt or transfer of money. So this is the electronic money transfer from 10,000 above. So that's 15 naira stamp duty. You can see it. You can see it. This one is already in place. It's the electronic receipt or money transfer. Once you transfer above 10,000, from 10,000 above, they will charge you 15 naira on it. The manner of denoting duty. What does this mean? Pursuant to Section 5 of the Stamp Duty Act and as reiterated in other provisions, seized document may currently be stamped using methods such as adhesive stamps, impressed stamps, embossed stamps, postage stamps, or stamp made by die. However, in alignment with modern trends, Section 124, subsection 1 of the Act introduces updated methods for stamping, which include tax stamps, a die, electronic or digital tagging, electronic receipts, or issuance of certificate. The inclusion of multiple digital stamping methods underscores the nation's commitment to advancing towards a digitalized economy and enhancing the efficiency of service delivery, which is a good one because technology is driving many things. So you can't be carrying documents physically to different offices with the cost of transportation, the stress on the road and everything before we now have stamp duty on it. No, it has the electronic digitalization have already replaced it, except for maybe you want to go and do uh, stamping on maybe in the court. That one they have not introduced electronic this thing to their own. You have to go there physical, and you will see many people in the court stamping for affidavit, stamping for marriage certificate, stamping for one thing or the other physically. Stress. So they have to introduce digital form of stamping those ones which you can do from anywhere you are. So we have change of administrative body. Currently, Section 4 of the Stamp Duty Act 7 designates the FIRS as the competent authority for imposing, charging, and collecting stamp duties on instruments executed between a company and an individual, group, or body of individuals, while the relevant tax authority in a state is charged with the responsibility of collecting duties in respect of instruments executed between persons to persons or individual at such rate to be imposed or charged as may be agreed with the federal government. However, Section 125, Subsection 2 of the Act had a significant shift by identifying the Joint Revenue Board as the relevant administrative body for the administration of stamp duties on the advice of Nigerian Postal Service. Consequently, the passage of the bill into law will supersede the FIRS and state tax authorities' role in stamp duty administration, effectively transferring such power to the board. So that is what it is. So instrument chargeable to the Stamp Duty Act, chargeable instrument, we have bill of lading, or bill of exchange, promissory note, sales or purchase of option, conveyance on sale, conveyance on in consideration of a debt, duty on transfer of mineral assets, provisions as to exchange, lease, duty on share capital, duty on loan capital, marketable security. So we'll be stopping in this part 7 of this video here. And we believe that you have clarity of the Nigerian Tax Act up to this part 7 of this act, and you can feel free to reach out to us to serve as your tax consultant, external auditors, or your compliance professional. So we can partner. So until we meet again in another video, please stay compliant.